Good to have you on Tesla Shorts Time, episode 545. Patrick here in Vancouver. It's July 18th, 2026. Here's what's happening with Tesla today. Franz von Holzhausen receiving the first protected Model S signature unit shows Tesla still values its design heritage even as focus shifts to new platforms. The Q2 earnings preview returns attention to Optimus and Cybercab after both programs missed first-half volume targets. Remember, the show covered Optimus on July 17th with Giga Texas factory construction underway and volume production still targeted for 2027 plus. Tesla will report Q2 results on July 22nd. The call is expected to include updated timelines that affect 2026 cash flow assumptions. Semi-production continues with a $27.6 billion valuation reference attached to the program. Guidance is also anticipated on internal Optimus deployment before any external sales begin. This connects directly to the open question of when hundreds of units per week might appear. Now shifting to how the supervised autonomy stack is evolving in the near term. Elon Musk confirmed that upcoming FSD versions will log driver interventions and preferred routes. Remember, the show covered FSD unsupervised on July 17th, with supervised miles still expanding ahead of regulatory review. The system will move from uniform behavior across all vehicles to individualized patterns. Examples include express lane preference or habitual exits. This change builds on the supervised stack already deployed and aims to increase adoption. Regulators will still require the base safety case before any unsupervised release. Early intervention data will feed the next training cycles at Cortex clusters. The feature addresses one of the open questions around FSD unsupervised by moving beyond one-size-fits-all behavior. From software personalization, the focus turns to physical movement of the next-generation fleet. Multiple Cybercab units were photographed secured on a Tesla semi-transporter. Remember, the show covered Cybercab on July 17th after the We Robot unveiling, with regulatory approval still the primary gating item. The sighting confirms ongoing movement of the robo-taxi vehicles between facilities. It follows the We Robot unveiling and precedes any public unsupervised operations. Viewers can track whether similar convoys appear on public roads in coming weeks. The transporter itself is part of Tesla's expanding semi-production that last appeared in fleet testing coverage on July 17th. This movement supports the broader timeline for initial fleet deployment once regulatory approvals clear. The production start date and initial fleet size remain the key open questions. On the regulatory front, the NTSB report states the driver overrode autopilot immediately before the fatal incident. Investigators examined vehicle logs showing the sequence of control inputs. The finding adds to the ongoing record of supervised system edge cases. Tesla has not yet issued a public response to this specific report. The report focuses on the final seconds of driver input rather than system performance. Future regulatory reviews of supervised autopilot will likely reference this sequence data. This adds to the record of supervised system edge cases under review. From safety scrutiny, the conversation moves to longer-term product durability questions. European data shows Hyundai and Kia vehicles retaining higher battery capacity after several years than comparable Tesla models. The metric reflects real-world degradation under mixed climate and charging conditions. Tesla's larger installed base provides more data points but also more variability. Future 4680 pack chemistry will be watched for any reversal of this ranking. The gap appears across multiple model years and usage patterns. Residual value calculations for used Tesla vehicles in Europe may incorporate these health figures in coming quarters. Battery health rankings in Europe expose a gap between advertised range and retained capacity after years of use. European data places Hyundai and Kia ahead of Tesla on this metric, despite Tesla's larger sample size and different duty cycles. The difference matters because fleet operators and used car buyers increasingly price vehicles on measured degradation rather than initial EPA numbers. Real-world charging habits and climate exposure vary widely across the continent. Yet the ranking holds across multiple model years. This pattern suggests that initial range claims alone no longer determine long-term ownership costs. Tesla's approach has long emphasized software updates and thermal management to slow capacity loss. Yet the published European figures show rivals achieving slower fade with conventional liquid-cooled packs. One explanation lies in cell chemistry selection and charge protocols that prioritize longevity over peak energy density. If the gap persists into the next generation of 4680 cells, it will affect residual values and therefore the total cost of ownership Tesla can advertise to commercial customers. Lenders already adjust residuals when degradation data diverges from manufacturer claims. Sustained underperformance on health would raise the cost of capital for Tesla buyers and compress margins on vehicles sold into high utilization fleets. Closing that gap requires more than range improvements. It requires chemistry and software choices that demonstrably protect capacity over the vehicle's full service life. Future pack revisions will need to demonstrate measurable gains in retained capacity, not only in laboratory cycle tests, but in the mixed-use conditions captured by the European dataset. From measured degradation, the discussion shifts to near-term market share signals in Europe. Tesla captured the largest share of applications under Germany's refreshed incentive program in the opening weeks. The result reflects strong Model Y and Model 3 availability relative to competitors still ramping compliant inventory. Subsidies apply to both private and commercial purchases. The next data point will be July registration figures showing whether the lead holds. Early uptake data positions Tesla ahead of rivals still adjusting to the new incentive structure. This lead could influence second-half European volume if the pattern continues into August. From current sales momentum, the story turns to internal design continuity. The designer of the Model S received VIN 001 of 250 of the limited signature edition. The car received paint protection film, ceramic coating, and additional protective measures. This allocation recognizes von Holzhausen's long role in shaping Tesla's exterior language. The choice signals that core design continuity remains visible even as production emphasis moves to newer lines. Next to watch is whether similar protected units appear for other long-tenured team members. The Signature series itself is capped at 250 units, underscoring the exclusive nature of the allocation. Tesla posted that direct rides in FSD-supervised vehicles convert skeptics more effectively than marketing materials. The statement aligns with the company's ongoing push to expand supervised miles ahead of any regulatory review of unsupervised operation. Data from these rides feeds the next training cycles. The next milestone remains the same measurable reduction in interventions on complex city streets. This approach continues the supervised expansion path last reviewed on July 17th. Real-world ride data also supports the shift toward personalized preferences now entering development. The article surveys current humanoid deployments across manufacturers and notes that most remain in pilot or low-volume internal use. Tesla's Optimus program is listed among those still scaling from prototype cells at Giga Texas. Volume targets for 2027 remain the key open question for external sales economics. Observers will watch for the first sustained weekly production cadence. The Giga Texas dedicated factory construction continues on the timeline last covered July 17. Initial internal deployment targets inside Tesla facilities will provide the first measurable production data before any external sales begin. Tesla will repurchase Model 3 and Model Y units that were built for the Canadian market but entered the United States. The action addresses import compliance requirements. Affected owners will receive buyback offers rather than retroactive certification. The program is limited to the identified VINs and does not affect domestically produced vehicles. The recall targets only the specific cross-border imports and leaves U.S.-built inventory untouched. Owners of affected vehicles will receive direct outreach from Tesla with buyback terms. Agility Robotics opened a new humanoid training facility near Tesla's Fremont plant. The location places a direct competitor within the same regional labor and supplier ecosystem. Training data collected there will target warehouse and logistics tasks. Tesla's own Optimus timeline at Giga Texas remains the benchmark for volume comparison. The new center will accelerate Agility's path toward commercial deployments in the same markets Optimus targets. Proximity to Fremont may also influence talent movement between the two programs. Tesla is adding dedicated semi-charging sites as production volume increases. The expansion supports fleet customers testing longer routes. Megacharger compatibility and site power levels are the immediate focus. The next indicator will be how many additional customer fleets sign on once the network reaches stated coverage targets. This build-out follows the first public megacharger opening covered on July 17th. Expanded coverage will directly test the long-haul economics that remain the central open question for the semi-program. Miami joins the list of cities with planned robotaxi coverage, while Texas operations increase vehicle counts. The moves test permitting pathways ahead of any unsupervised regulatory approval. Fleet growth numbers will be compared against earlier internal targets. The expansion builds on the initial Texas deployments already underway. Miami permitting will serve as an early indicator of how other major markets approach robotaxi operations. The Chinese SUV undercuts the Model Y by roughly that margin in its home market. Early European pricing rumors suggest similar positioning once exports begin. Tesla's response will likely center on software features and supercharger access rather than matching the sticker. The price gap appears across multiple trims and battery options. European buyers will see whether the difference holds after tariffs and incentives. Hyundai, Kia, and Rivian models keep physical buttons and traditional gauge clusters, while pricing below the Model Y. The design choice preserves familiarity for buyers who prefer tactile controls. Tesla's screen-only approach remains a differentiator that some competitors have chosen not to copy. The button retention appears consistent across the three rivals despite different price points. Buyers weighing the trade-offs will compare long-term software update access against immediate physical controls. There is a challenge worth discussing. The piece argues that Musk's public profile and divided attention across multiple companies now represent Tesla's primary external risk. It contrasts this with earlier periods when product competition alone defined the narrative. Tesla's ability to maintain execution discipline while the CEO's time is split will be tested in the second half of the year. The argument centers on how investor perception of divided focus could affect valuation multiples even if operational metrics remain steady. Execution on the July 22 earnings call and subsequent guidance will provide the first concrete test of that thesis. Keep an eye on July registration figures in Germany and any fresh cybercab sightings on public roads. And that's everything worth knowing about Tesla today. TSLA closed at $380.84, down $10.22, 2.6%. If the show saves you time, a quick rating on Apple Podcasts or Spotify goes a long way. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. I'll see you tomorrow. This show comes to you from the NARA Network. If you want another sharp daily briefing, the Do Positive Pod has you covered. Good news in science and tech, plus one concrete action you can take. All our shows are free at naranetwork.com. The Do Positive Pod is the club for people who do something about it. Episodes and the dispatch wall at naranetwork.com/thedppod. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.